Please tell us about the high and low points of 2019.
Yes, and the high point of 2019 is indeed the fact that we have kept customer trust and grown it. And that is evidenced by the fact that our order book has increased from 130 million in September last year, as we announced to the market, to 170 million today. Despite the difficulties in 2019, we have kept the customer trust and we have grown the business in terms of order book. The low point is obviously a very, very deep regret that we missed out revenue recognition to the tune of about 50 million and the associated margin. Clearly, that is a deep regret for the company and indeed for its shareholder. I must emphasize that is not a business which is lost. We had to make a difficult choice as St. Kitts project financing was getting delayed, primarily because the land lease with the government took much longer than anticipated. In fact, the land lease is signed only in April this year. So because of that, we missed revenue recognition from St. Kitts and few other projects, leading to a 50 million of revenue, which moved from 2019 into 2020. It is not a lost business. Nevertheless, that's a low point, and we do regret it. I personally regret that.
Tell us about the end markets that Leclanché is focusing on.
Just as a recap, we primarily operate in two business units. One focus on stationary storage. This is application of energy storage for electricity network. A good example of that would be the St. Kitts project. And second aspect, we focus what we call as e-transport, focused on fleet vehicles, fleet of marine vessels, fleet of trains, buses, trucks. That's really our focus. Those are the two end markets we are focused on.
And I've read recently that there's some suggestion that fuel cells may actually be more appropriate than batteries for fleet applications, for heavier vehicles, such as ferries or trucks. What's your view on this?
First of all, I'm a proponent of science. In the end, physics, chemistry, and mathematics, the science works. Okay, so let me first address your question on fuel cell. We do believe that fuel cells have a place to play, especially in long distance, long range fleet vehicles, be it marine, bus, or truck. Certainly there is a place for that, just as there is place for current technology, lithium business. So if I can put some facts to you and then come to the technology, 70% of all ferry traffic in European Economic Area, 70% of all ferry traffic in EEA, European Economic Area, can be all electric today. We have proven that through our project in Denmark, the project called eFerry. Now it is proven that 70% of electric ferry routes in Europe could be all electric. We can do that today. Imagine the impact on reduction of CO2, greenhouse gas emissions, and NOx. Okay. Second aspect, coming to fuel cell part of it, I do believe long distance vehicles, be it a truck or marine vessel, would evolve to be what we call in Leclanché architecture, in Leclanché technical solutions, we call it dual mode of operation. I don't say hybrid or all electric, I say dual mode of operation. I envisage that every long distance vehicle, whether it is a cargo liner from Europe to Asia, or it's a truck from Czech Republic to United Kingdom, all these long range vehicles would eventually have a gas engine, call it clean fuel, clean hydrogen, or any of the gas engines. It would have a fuel cell, oftentimes, it would have a battery. If you put lithium batteries and fuel cell, essentially they are complementary. Okay, batteries does the most surge current, start, stop, drive part of the job, whereas fuel cell provide more consistent energy, call it trickle charge. I believe that these two will coexist, and as we have proven is a big number, but I can say as we are doing the work with Toyota North America, there is a Toyota's hydrogen fuel cell, hydrogen tank, hydrogen fuel cell, and Leclanche's batteries, driving long-range trucks in the United States. I see this to be the future, really.
And so moving to more recent events, can you tell us why Leclanché has taken the decision to form two JVs with Eneris Group?
Indeed. I think, if I may, why are we forming the JV? Essentially, if you see what has happened over the last 5 years, of course, I leveraged the research and development work done before I joined the company. What has happened over 5 years that the two business units have now reached a critical size in terms of customer contracts, order book, and the people. We have reached a critical level of certification to address the markets we are addressing. So now onwards, we need scale. Scale means more capital. The joint venture structure we are putting with Eneris is a win-win for both companies. It makes Leclanché a capital light, yet we access large-scale manufacturing, exclusively building Leclanché products. So primary driver essentially is to make Leclanché capital light, yet have access to a very large scale volume. Just to put a number to it, we go from 250 megawatt hours of cell capacity in Germany to nearly 1 gigawatt hours by Q1 2022. And in modules, we go from 50 megawatt hours in Switzerland to 500 megawatt hours by Q1 2021. That's really the rationale and motivation to do the joint ventures.
Can you tell us a little bit about the financial details of this transaction?
Indeed, sure. I think I'd like to summarize the three aspects which are important in terms of financial details. First and foremost, okay, the Eneris agreement provides us a loan up to 40 million for working capital purpose. 40 million, first 20 million is confirmed in 4 tranches. Other 20 million, we still need to discuss the terms and agree with Eneris, our partner. The second financial aspect is very exciting for us. We are licensing on a non-exclusive basis Leclanché technologies to Eneris Group for euro 30 million. Euro 30 million. This is second time industrial endorsement of Leclanché's technologies. We license our technology to Exide Industries Limited in a joint venture in India back in, I guess, June, July 2018 timeframe. And here we are again, within 2 years, we are licensing yet again our technology to an industrial player in Europe for euro 30 million. The third aspect is a big number. Let me just elaborate that. We are going to avoid a capex of 110 million euros, of which 50 million is now to triple the capacity in Germany and 6 times the capacity here in Switzerland. And a 60 million we would have had to invest in the time frame of 2022. We don't need to invest that because we would get access to additional cell capacity from Eneris plans to build a factory in Poland. They plan to build a gigawatt hour scale, multi-gigawatt hour scale factory in Poland. We would have access to that capacity without having to spend further capex.
And earlier,
Mhm.
you referred to a shift to a build, own, operate model on the stationary energy storage side. So
Mhm.
can you tell us a little bit more about the rationale for that, please?
As I said, this decision has been very, very profound and frankly quite challenging for us to make. As 2019, we witnessed that we had delay in Saint Kitts project. The board, the management, we discussed. We said, do we want to build Saint Kitts project, which has a 20-year power purchase agreement, very profitable project, for 58 million revenue, 12-15% gross margin? Or should we now make a profound decision to say, look, we will build, own, operate this project and projects like this, which have long-term power purchase agreement, long-term offtake agreement, therefore long-term income cash stream. St. Kitts project alone on a standalone basis would yield about $10 million of revenue every year and about 5 million positive EBITDA. The primary motivation to build, own, operate project structure is essentially to consolidate a profitable business. St. Kitts alone, again, is $5 million positive EBITDA every year for 20 years. That's really the motivation.
Well, that sounds pretty transformational.
Yes, indeed.
So I can see it's very exciting. How close are you to realizing this, and what are the major steps that need to be completed before you're there?
I'm glad you asked the question. It is important. We are very close. But first of all, if I may, what are the major steps? Clearly, this would require a different type of capital, infrastructure type of capital, in order to put the equity part into these projects. So build, own, operate, hold co structure we are putting in place will require what you call a capital to contribute equity into these projects, which Leclanché will own in majority and consolidate. So clearly there is a capital raise which is to be done. We are in very advanced discussions right now to build this structure with a large infrastructure investment partner in the US who would be a co-investment partner with us. Together, we'll capitalize the BO structure to contribute equity in projects starting with St. Kitts. Additionally, as we informed in our press release, we have already secured $46 million of construction loan from another fund in New York. I believe realistically, we are 6 to 8 weeks away to give a full detail of the BO structure.
Look forward to hearing about that. So thank you very much.
Thank you to you, Anne.